We've got Sumit Ritolia, the lead analyst modeling refinery and oil markets at Kpler, joining in on the show right now. Sumit, hi. Great to have you today on ET Now. Sumit, let's firstly talk about this 45-day buffer, right? Given India's current 100 million barrel reserve, how is it that you see the risk profile changing if the Strait of Hormuz disruption extends beyond the theoretical 45-day odd coverage?
Hi. Thanks for inviting me. I think you hit the right note starting with the 30 days buffer. And like before starting, like India was importing Russian oil. Like it was not that India was not importing Russian oil. It's just like from last couple of months, like there was a base load that was maintained around 20-22% of India will be importing, because at highs India was importing around 40 to 45% of its crude oil requirement from Russia. But again, it's a very welcome move, and looking forward, we we are well suited in terms of crude oil for now. And also, as you mentioned, like overall India's buffer for only for crude oil is around 100 million barrels, and if you add in product stocks and in different refineries tanks and in terminal depots. So in terms of crude oil supply and in terms of refined product supply, I think as of now, India is well in a comfortable position. Also, we need to factor in, like, India is one of among the highest exporters of products, so that might curtail it down. But domestic supply, we are in a well position, and as supply chain gets relinked, and we might be seeing more barrels flowing from the Atlantic part of the world. Like we might see more barrels flowing from West Africa, US, Russia is one of the factor, because you have around, in as per our latest data, we have around 26 to 30 million barrels of crude floating in and around India. So yeah.
What about the LPG vulnerability? Given that you've noted that India is more materially exposed to LPG disruptions, how do you think one can work around that?
Yeah, it's a good point, but again, India is exposed to LPGs. Like we import around 80 to 90% of our LPG via Strait of Hormuz, but I think the government has already stepped in, and refineries are looking and even have started producing more, diverting their feedstocks from petrochemical towards LPG and making sure the yield of the LPG stream is more. So, and I think also looking at different trades, India do imports LPG from Russia and again Atlantic Basin over the past. And I think as the tightness slips in, I think Indian refiners, or particularly OMCs, are looking to import LPG wherever it is feasible as of now, because pricing is one of the factor, but at this point, it's more of an energy security point of view.
Sumit, you spoke about nearly 26 million ton of crude floating around India. Of that, how much is coming to the Indian ports, and also with respect to the LNG or LPG, which got disrupted because of the Strait of Hormuz? Are you seeing some diversion of Russian gas from European markets to India?
I will not say to India. Like, let me first start with the LPG and LNG. We are not seeing any significant diversion yet to India, but we are seeing some tankers that from US that were expected to destined to Europe has been destined to Asia. It's still early to say like it will be coming to India or other parts of South Korea or Singapore, because again they are one of the major consumer of LPG in their petchem plants. And coming to crude, for the Russian barrels, at times I think it was around 30 million barrels, 30 to 31 million barrels when the conflict started, and now we are seeing around 25 to 26 million barrels of Russian oil. So we have seen an uptick of Russian crude flowing from this floating storage to Indian refiners.
Right. Sumit, also talk to us about LNG. You did say that carriers are being diverted from Europe to Asia. If you talk about the gas storage in Europe, that's already at the lower range of the 5-year average level that we're seeing. What does this do to global energy prices in Europe, and the impact it could have back home, if at all?
I think we have already seen like how energy prices have been reacting, and like if you look at, we would have expected this 90 to 100 million, $100 per barrel to price in quite earlier. But if you look at the last two trading sessions, now the fear or the risk is now real, and I think continued disruption of Strait of Hormuz risk has getting to priced in, because if you remember, like when the war started, like early days, it was like everyone was hoping that it might cool down, like as we have seen last year also. But now the real risk of trade disruption with Hormuz is has priced in, and also we need to factor in, because as it prolongs, the whole supply chain gets disrupted. So even if it gets gets cooled down, or there is some truce, or there is some peace negotiation happening, so suppose next week, it will take 4 to 6 weeks to for the normalcy of the supply chain to happen. So we are in for a quite a bit of pain in terms of crude prices.
Sumit, can you take us through what's the kind of supply line through the Red Sea at the moment? Is there an increase in supplies coming from the Red Sea, especially the Iraq crude coming through the IPSA pipeline? And also, how is the Suez Canal traffic? Has it gone up or has it gone down?
Yeah, it's a good question with respect to India and mostly Asia. I think Saudi Arabia's Aramco, they have started to load their east-west pipeline, and we have seen incremental barrels flowing from Yanbu. But again, we need to factor in, like it was from Strait of Hormuz, the trade for crude oil was around 30% of whatever global trade was, and compared to what's happening now, it's still good, because some barrels that were expected to flow via Hormuz is getting diverted, but it's not that marginal increase compared to what we were without Strait of Hormuz.
And what about the Suez Canal? Is it operating normally, or are you seeing some restriction of traffic through that as well?
I think as Asia scrambles for more barrels, and I think the traffic is expected to increase over the Suez Canal and over the larger Red Sea to Mediterranean region. But as of now, we have not come across any potential disruptions there.
Also, if you can take us through, do you see India reducing its crude intake going forward, because there's a 30-day waiver which has been given. We were anyways getting 1 million barrels a day. Now it would have gone up or will go up over the next 30 days. But do you think that the gradual decline which was there from the peak of 1.8 or 2 million barrels a day, and we come down to nearly half, will again take some more months to happen now?
Yeah, I think again, it's more of an energy security point of view, to be honest. And we see a sharp rise in March import for Russian barrels. I think we might clock around 2 million barrels per day, given like half of our crude energy was coming from via Strait of Hormuz. So we might see Russian barrels flowing to more than 2 million barrels per day at given time. And also, again, like on the crude runs point of view, I will stress to again the same point I mentioned earlier. India is one of the largest exporters of refined product, and given the dire situation, we have not heard anything from the government's point of view that petroleum product exports has to be curbed or not. But as we are seeing with other major Asian exporters like Korea, China, and all, they have started to curb product exports and maintain more of a domestic supply. And also, as crude flows to India gets restricted, I think it's already restricted with Strait of Hormuz choked. I think mostly it will be to cater domestic demand. And we might see run cuts happening. Like in our SND, we have factored in around 7 to 8% of runs getting cut for now.
Interesting. Sumit, so good having you on ET Now today. Thank you so much for your time.
Yeah, thank you.